Welcome. Today we'll be reviewing Jermey Financial Education's book, Modern Long-Term Stock Investing Secrets from $0 to $200,000 by age 25. I think that's the correct title. It's a little bit of a mouthful. Um, I just finished reading the book last night, and yeah, I like it. I have a list, like a list of some really big pros of the book. First, first pro, that book is easy to read. I really appreciate the fact that it's super easy to read. He doesn't try to do any like of this like stock market jargon where he confuses you or stuff like that. For instance, the book The Intelligent Investor, although it's very good, yikes, that book it can be very intimidating at first. But he doesn't do that. Keeps the book really easy to read, as if he's just talking to you, explaining to you simply, like things, balance sheet things, cash inflow, and net income. It talks a lot about margin, gross margins, profit margins, um, and he makes them simple. Makes it really simple for you to understand. I mean, I for myself, I knew most of the stuff he was talking about, but the way he explained it was fantastic. I really appreciated that. It would have been something helpful as a beginner. Although the book is not like targeted solely for beginners, it's targeted for people who are serious about making money in stocks and being long-term investors, just like he says. Second big pro of the book, he does not hide any of his secrets, and that is just straight up honesty and facts and awesome to read. It's not abstract. It's very concrete. He tells you what I look for in a stock is this, and that. For instance, he says I look for um, CEOs and CFOs and COOs who have a solid, cohesive team, been together for 3+ years, and make good, correct decisions over and over and again. He says he looks for things like big margins on their sales. So, like, if, for instance, GoPro sells their camera for $100 and it only costs them $20 to make, if they have to ride through some financial hardships, they can kind of lower their prices and ride through the hardships a lot easier because they have a lot of margin there to work with. He talked a lot about he's also he's a value growth investor at the same time, so he likes to see things growing, like revenue increases every year. And I think he said 10% minimum, or 10% is the minimum ideal that he looks for in revenue growth per year, and net income he likes to see grow. And he really puts down everything. He shows you examples of balance sheets, and he says this is what I look for, and this is what I do, and this is the math I do. Like he says, I take the investments here and this and that, and I calculate a true PE, and that's the PE that he uses. And I actually agree with his valuation method. I read it and I thought, this is better than the conventional PE method. So, uh, as myself as an investor, I don't use the PE that much actually. But when I read what he and how he described it, I totally agreed with his true valuation method. There's a lot of secrets he really does just kind of throw out there. It seems like everything he learned, he really just tells you. So it's really awesome. Third big thing that I liked about the book, it's very motivational. The first like 6 chapters or five chapters maybe, he kind of motivates you. He kind of brings you up a story of where he came from, success stories of how he got there and where he is now, and kind of explains. He kind of just pumps you up for the idea of you can do it. You can find these companies too, and you can in time make profits on your stock selections. Um, so yeah, that's just um, that's like really refreshing. Like it's like a wake up call. If you're kind of sleeping or dozing off, you see these companies that are doing great, and you're just like ignoring it. your investments, your money can make you money. That's what he says. Like he found out how to make his money, make him money. And that's a great thing for him. Um, Another pro, he goes into details on the important things, and he kind of vaguely talks about the less important things. So he doesn't dwell a lot on like teaching a beginner, although it's beginner friendly. He doesn't dwell there. He doesn't say like, you know, this is this is exactly how you have to open an account. He says, oh, these are some good resources for opening an account. These are the ones I like. And if you don't have a brokerage account, you can kind of figure out some of the more basic things. He doesn't go too in detail on these little things, but where it counts, when he's talking about stock selections and company selections, he really goes in details. Now, any cons? Do I have any cons of the book? I don't really have any cons, actually. I liked it. I have one thing to say. I noticed, I don't know if it's maybe because I just have the Kindle. Oh, it is. It's only a Kindle book, actually. Yeah. I don't know. Maybe there needs to be like a re-update on the book, but like I just noticed a couple instances in which the book had like interesting hyphens in between the words. I don't know if it's just my version or what happened there, but I saw the word importantly, and there was I am hyphen importantly. So I'm thinking maybe it was a wrapping error. Maybe like the book is supposed to cut off at the I am, and then it puts a hyphen at the end, and then it wraps to importantly. But on my version, it was just in the middle, and it's just really weird looking. That's not really a book complaint. It's just kind of strange. I don't know. But yeah, so overall review of the book for $9.99. If you believe in his tactics, which I actually believe in his tactics, I think they're very successful. He wouldn't be successful for 7 years if they weren't. He has sound ideas and methodologies. Then it's definitely worth it if you're gonna invest in stocks. And here's what I'm gonna do. I'm gonna put his tactics. Everything he said. I'm gonna take it and apply it into a virtual stock account. I'm gonna manage this stock account based exactly on what Jeremy says, and I will give updates on my performance based on my tactics, my strategy, and my ideas as just a purely growth investor and trying to time more or less time the market and cut losses quickly and only take about a 25% gain before I try to jump onto a new gain, versus just his long term, really look at this, that, and this of the company and give it a long term run. And yeah, I can compare the performances and just see like if he has a better strategy than me, why would I not take it? We're just talking which one makes more money. So yeah, that's gonna be fun, I think, and I'll give updates on it. Let me know what you guys think. Other than that, peace.